Shifting focus now to the commodity markets. Manisha is back with us and she's focusing on crude. Manisha, what's happening?
Oh, well, absolutely. Thank you so much for that. Well, we started the day slightly on the positive note as markets were trying to get in more clarity on what really could come in from Venezuela. But it clearly seems to be very, very volatile start to 2026 right now. We did see crude prices start positive, and there you can see it's trading 0.25% on the weaker side right now. So clearly, markets are not concerned about any oil supply disruption coming in from the U.S. takeover in sense of Venezuela. That also is after we've seen Venezuela proven crude oil reserves, remember, stand at a huge 3.8 million barrels there, billion barrels there, which is clearly 17% of the global total when it comes to oil reserves in the global markets there, much higher than various other OPEC countries as well. Now, Venezuela's current production stands much lower, less than 1 million barrels per day. And out of that, when you look at the overall exports, well, 80% of Venezuela exports go to China, which stands at around nearly 740,000 barrels per day there. Apart from that, the U.S. Chevron's exports stand at a very small 140,000 barrels per day. And then you have Cuba, which also accounts for nearly 24,000 barrels per day. So as you can see, India is quite isolated with what's happening in Venezuela. In sense of supply concerns, there's no concern there. And when you look at the overall numbers as well, as Venezuela produces less than 1 million barrels per day, we're looking at an excess supply of nearly 2.5 million barrels per day for 2026. So even if the Venezuela oil was completely get out of the market, we still would be looking at a surplus situation for 2026. Well, the U.S. strike inflicts, no damage on oil production and refining industry in Venezuela. So that supply concern is not into the markets there. The second thing is about U.S. Saying that the companies would start taking over to Venezuela. And that would mean that the sanctions which are on Venezuela crude sales right now perhaps would be uplifted. It also does mean that you would be looking at U.S. companies investing, and that would mean billions of dollars to revive that production. How will that happen? When does that happen? Which are these companies? So that is a bit of a clarity that the street is awaiting at this point in time. But there's a very interesting Goldman Sachs report which says that a $4 billion of a downside, $4 per barrel of a downside is what you could be looking at in case of crude oil prices if the Venezuela crude production rises to 2 million barrels per day, and that also by 2030. And that really isn't too much right now. And the markets do believe that instead of positive, it is a negative view that you are looking at from U.S. in sense of Venezuela. But that's one part of it. The other is U.S. comments that are coming in on Iran issues that could take the prices on the higher side. And then U.S. also has said, or rather warning the narco-terrorist states, which is Mexico, Colombia and Cuba, of action going forward. If that happens, that geopolitical impact or sentiment is what we could be looking at in sense of prices. But currently, with the kind of surplus that we are dealing with, there is no impact on the higher side coming in for crude prices there. The other thing that the markets are dealing with is the OPEC Plus meeting, which was on 4th of January. The oil output has been unchanged. Last year, remember, OPEC Plus has brought in nearly 2.9 million barrels per day into the markets. So the first quarter, Jan to March, there is no increase in production. And the OPEC meeting, the next one is on 1st of Feb, is when they would take a further sense on what really do they want to do in 2026. Having said that, there's a lot of data coming in this week, especially from US. You have ISM manufacturing, employment data, Fed official comments. All of that would tell us on where the crude prices will move in the days to come.
Okay, all right. Thanks a lot for that, Manisha. Well,